All right, welcome back, everybody, to episode 5 of the 10-second interview show. We are lasting longer than some network television at this point, so that is very impressive, if I do say so. With me today, Kevin Strauss, portfolio manager. We're talking about fixed income. Kevin Strauss, the rules are, I ask you 5 questions. You have 10 seconds to answer each question. It's a TikTok world. We're a couple of TikTok dudes. People don't have attention span for long answers, so you got 10 seconds, and we will cap you at that. First question, Kevin Strauss, I throw at you. When looking at municipal bonds versus taxable bonds, right, what's the tax equivalent that you're looking for to determine whether or not it makes sense to be in one or the other?
Well, munis today are trading at about 70% of Treasury. So if someone's in a higher than 30% tax bracket, munis are often a very good option for them on an after-tax basis.
Look at that, on the button. Oh, look at that, on the button quickly. Nice. See, I even have my timer going. So 30% tax bracket is usually the deal breaker. When building portfolios right now, what are you doing in terms of duration, yield? What are you looking for? How far out on the curve are you going? 10 seconds, go.
Our duration's about 3.5 years, so we're focusing on munis with 1 year maturity to 10 at most, but with a real focus in the 4 to 6 year end maturity period.
Okay. The muni space, right, obviously covers the spectrum, right? A lot of people got burned on Puerto Rico, that type of thing. How do you figure, but there's yield chasing, right, that goes on. How do you feel about, the lower credit quality names, whether it's a Puerto Rico, Chicago, New Jersey, are those the type of things that you're putting into muni bond portfolios, or how do you know what it is that tobacco settlements, how do you know what it is to buy?
So at ACM, we focus exclusively on a high quality portfolio. So every bond has an A credit or higher, regardless of insurance coverage. So we're focusing on as high quality portfolio is out there.
All right, you hear that? Listen, this thing is just giving you the biz right now. Do you find risk in junkier credits, junkier paper? What is the risk potential there, in the event something was to happen? Is it okay to yield chase in municipal bonds?
We don't think so. Once you get below the A- credit quality, the historical default rates go up quite a bit. So again, we're focusing on very, very high quality, sleep well at night types of munis.
What about liquidity? So obviously the municipal bond market, extremely less liquid than, corporates. How much of a concern is that, the ability to trade a portfolio?
Yeah, we tend to be more buy and hold investors on the muni side because you're right, there is friction cost, there's less liquidity, but typically we're holding these bonds to maturity.
How many questions is that? Is that 4 or 5?
I think it was 5, but
yeah, I think it was 2. Let's just say it was. With that, Kevin Strauss, thank you. Real quick hit on the municipal bond front. We're building good muni bond portfolios. Sleep well at night. As you heard portfolio manager here, Kevin Strauss, just say. So obviously it's something we can help with. As we know, the lingo now, click and subscribe. That lets you know when we keep putting out future 10-second interview shows. More to come, more portfolio managers, more talent, more thought leadership, more intellectual capital. 10-second interview show doesn't stop. Thanks, everyone.